I can't explain how much of an incredible opportunity it is that we even get to invest in this. Back in the 90s, Dan Tapiero was working with some of the biggest funds in the world and sometimes breaking entire central banks. Dan was the OG.
We are still the largest growth equity fund in the world that's exclusively focused on crypto, blockchain, Web3 digital assets. We're going to make a 5 to 8x on the portfolio. Everyone knows who we are. We have a process. We do a lot of homework. We share it with our LPs, and we're careful about where we enter.
Strangely enough, we had the best performing of your funds, the one that we invested in the bear market.
You should all be patting yourself on the back for making that asset allocation decision. We have many sophisticated investors who hesitated and did not. The performance is almost up 300%. We are well far above the top decile of all private equity funds globally across all sectors and disciplines.
What do you think the next 18 months look like?
We're entering a period now that I'm calling the Americanization of crypto. I think we're going up to 180,000 on Bitcoin now in the next 12 months or so. As long as I can buy companies at reasonable valuations, it sort of doesn't matter to me about the bull and the bear phase. This is a generational macro opportunity.
There you go, folks. The one and only Dan Tapiero. That was pretty epic. He is the guy now in the space. What he's trying to do is minimize the downside, which he does incredibly, and maximize that upside. That's what we get when we invest with Dan. And now you all have this opportunity to get into 50TT if you're part of the investment club.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... Let me tell you a little story about Dan Tapiero. When we got heavy into this market back in 21, we started interviewing the biggest names in the world. I spoke to Yatsu of Animoca Brands. I spoke to Michael Saylor of a tiny little company called MicroStrategy at the time. I spoke with Dan Moorhead of Pantera, one of the biggest funds and one of the earliest investing funds in crypto. And I spoke with a guy named Dan Tapiero, who I think is about to join us right now here in the waiting room. Dan was the OG, all right? And when I worked at Bankers Trust back in the 90s, Dan was actually a client of our options trading desk because he was working with some of the biggest funds in the world, going head to head against the Spanish peseta or the Thai baht, and sometimes breaking entire central banks. Dan really has been there and done that. And back in, I think it was 19 and 20, he started investing in the digital asset ecosystem, and then he decided he was going to go ahead and make a play for it. And so we started getting to know Dan, And I still remember I went to Paris Blockchain Summit, and I was having a conversation with him in the back. And I said, Dan, I've created this group called the Investment Club. And, we've got these amazing members in there. We're getting great deal access. And he said, how would you like to invest in my fund? And I said, well, Dan, I think we're much smaller players. You're used to getting 200 million bucks a clip. And he said, you know what, Brian? He said, I'd love to have you guys involved. I love what you're doing. I love the way you add to this ecosystem. I love the media you create. And let's find a way to make it happen. And that's how we did this, folks. We put $1 million into the 1RT group, and Dan has really created magic with it, absolute magic. And so we're super blessed tonight to have him on the call to talk about what's been happening with 1RT and talk about the future, which is 50T. And I believe we have him there in the waiting room. And so I think we're going to bring him in right now, Martini. Might as well bring in the main guest, which is Dan himself. Hello, hello. We've got Mr. Dan Tapiero in the house.
Brian,
Dan, can you see me all right and hear me okay?
I can see you okay. I was expecting to see you a little scuffed up after your bruiser battle in Singapore, but you look pretty good.
My head was throbbing for a few days. Let's just say that, Dan.
Okay, but you look okay though.
Thank you. Yeah, he's a 19-year-old kid. He hit harder than I've ever been hit, but by the third round, I think I was giving it back to him pretty good, and it was a good night. We missed you in Singapore. It was a great night.
Oh, good.
So, Dan, I just want to say, first of all, thank you so much for coming here. We've been all looking forward to it. Everyone's been really excited. I've been playing a bunch of our old videos and trailers and, talking about the conversations we've had for the last 4 years. And what I really want to do is pass it over to you because, you've got such an amazing perspective on this whole industry. And, it seems like every single week you've got another company that's IPOing as well. And so I know we've got a deck for 50T. And I also know a bunch of people here are investors in 1RT. And so I think I'll pass it over to you. If and when you want the 50T deck, I can pull it up and then kind of scroll it as you need it.
Okay, but so it's Kai who works with me is not going to be doing it. You will be pulling it up?
I'm going to be pulling it up, and all you have to do is say it's next slide, and I'll do that.
Okay. Yeah, look, let me just make sure. Okay. Well, thanks everybody for joining today. You were investors in what we're calling our Fund 4. There are people on the call who are in Fund 4, which is one roundtable partners. Our first 3 were under the 10T label, and we rebranded all of the funds, so they're all now 50T, and the fund that we're launching now is our Fund 5. Those of you in Fund 4, that was the first fund that you invested in, have dramatically outperformed all the other funds. We were fortunate to be able to put money to work during the bear phase at the end of 23 and 24, and we're able to buy stock at dramatically reduced valuations. The companies were doing well. It's just that there were distressed sellers in the space. And I don't want to get you too excited, but there's one investment in Fund 4 that we're expecting an IPO in Q1 that will, from that one investment, return the entire fund. So that's just one investment. And then you have other ones. We think that between now, over the next 6 months, as stock unlocks that IPO'd, or in the case of Deribit, which was purchased by Coinbase, we have Deribit stock in Fund 4. That stock starts to trade freely in February. We think we're going to be returning, and we'll be talking about this again at another time, specific to people who aren't Fund 4, about how that will be handled, potentially returning. That would be 25% of the capital already. It is a 10-year life fund, and we do see some attractive investments for Fund 4 still. So we're considering, reinvesting that capital alongside Fund 5. But the performance, of course, is almost up 300% in Fund 4. Our other funds have done well, but not quite that well. And so, you should all be patting yourself on the back for making that investment, decision, that asset allocation decision into Fund 4. We have many sophisticated investors who hesitated and did not. As you know, we've got $2 billion dollars in total AUM today. We have 24 investments, and we are still the largest, and as far as I know, the only growth equity fund in the world that's exclusively focused on crypto, blockchain, Web3 digital assets. And so the reason we're launching this fifth fund now is because, again, number one, we have 6 realizations that, Brian mentioned. In our third fund, we had Circle that we invested in at a $3 billion valuation, and today it's trading north of 30. That unlocks in November. We have eToro that we bought at $2 billion. I think it's close to 4 now. That was in Fund 1. Again, the Deribit position purchased by Coinbase, which is the largest deal in the history of the crypto markets, largest M&A deal. That's at close to $4.5 billion of value. And then we also had Figure and Gemini. And Figure was in Funds 1, 2, and Figure we also have in Fund 4. So that's another realization when that comes unlocked. And then Gemini, the Winklevoss firm, we invested $80 million, and that came public a few weeks ago. So because we're returning so much capital to the existing investor base, I think they would like to have another entity to invest into, and we think it'll be, even before Kraken, almost $1 billion total that gets returned to the existing LPs. Now, why am I sort of harping on this? There's some of you who are not in these, who are not in the Fund 4. It's because it speaks to our track record. And I don't know, Brian, if you want to pull up page 9, I think this is very important to show people. We've been doing this for 5 years now. I had the idea for these funds in 2019, and we launched in January 21. But you can see here on page 9 that our performance of the vintages that we invested in 21, we are very well far above the top decile of all private equity funds globally across all sectors and disciplines. This is just from the existing investments. The realizations that I mentioned does not include the very large Kraken IPO that we're expecting. As I said, I think that is going to put us potentially, I don't want to say number one. It's kind of weird to say you're the number one performing PE fund. I don't know that for sure. But we're definitely in sort of the top handful in terms of this metric, which is distributions to paid in capital, which is, as far as I'm concerned, the only metric worth measuring. There are all sorts of ways that private equity guys measure performance, but I think about, you got $1 and how much did you get back? And that's what this is a measure of. And in the private equity world today, the liquidity, the other funds in other areas for the 21 and 22 vintages are just stuck. And this is a very long conversation about why that is not for today. I think we look very good because the rest of our space is frozen for, as I said, whatever reasons. The public markets are clamoring right now for public stock in crypto blockchain businesses that are more mature. So if you just go back a page, you can see, I should have called this up before, but you can see the companies that I mentioned. We also have Cypher Mining, which was a fantastic investment we made in Bitfury, the holding company. That's also public. We've sold a little bit of that. We've had a bit of a realization there. We still own 1/3 of that. And of course, they've pivoted towards providing power to the hyperscalers, and that's a whole AI. The Bitcoin mining play has sort of turned into a little bit into an AI power play because they're one of the cheapest. Their cost of electricity is one of the cheapest in the world. The Cypher groups, and then we have at the bottom here some other companies that we're invested in as well that we expect to have realization. So, when we set out to do this, and I remember when I talked to Brian in the very beginning, even, way before Fund 4 years ago, I had this idea that, and that we can go to the previous page for a second, that, this is just some of the details about the funds, that look, in the future, we would have many public companies that were connected or and involved with Bitcoin or blockchain. And I thought infrastructure, especially, that I wanted to own sort of the picks and shovels businesses that were building this new digital asset ecosystem. And so, again, you can see, the performance where we are for the first 4 funds, and then we've done quite a bit of co-invest as well. I'm not sure, Brian, to what degree you've been involved with that, but we do. We've had little bits of co-invest alongside us. And you can see our Fund 4 was smaller than the other funds, and that was largely because it was during the bear phase and it was harder to convince people. We're thrilled you guys came in, and again, it's up about 300% gross. I would, Brian, I moved to just 10, I guess, if we just go through this deck a little bit. You can see, I would say, if you're having a hard time thinking about, you go to page 10, about what we, about what we do, even conceptually, you can see here this company Circle, which has, gotten lots of press recently. We're very careful about our entry price and valuation. It's strange for me to think that we're still the only growth equity fund in the world exclusively focused on this area. There were traditional growth funds that you may have heard of, Tiger and Coatue and Silver Lake and Thoma Bravo. These are, funds that have over $100 billion that invest in growth and in technology that came into the space in 2021, but they paid very high multiples on certain deals. And as a result of them, they also invested in FTX, and they invested in Celsius and BlockFi. And we have a slide that I'll show you later. We passed on over 250 deals in the past few years. We care very much about our entry price, which is the multiple that we get into the business, the multiple of revenue. We focus on getting in at a 5 to 10 times multiple. These companies are trading at much larger multiples today in the public markets. But the problem in 2021 was that many of these very smart traditional guys did not allocate enough resources to this area. It's very complex, very complicated in a lot of ways, and they overpaid. And as a result, some of them are still down on their investments, even though Bitcoin and other things have hit all-time highs recently. And then, of course, some of them, Sequoia sort of most famously invested in FTX and lost $400 million in that one investment. There were many people who got hurt in 21. We didn't. We did, unfortunately, have 2 companies that went to zero, but it ended up being less than 5% of our total AUM. So it didn't hurt us because we were careful about where we get in. And really, it's the diligence that we do that allows us to be that careful. Maybe just go for a second, skip ahead to page 32, just to show there's a great section here on the right-hand side. There we are, 33. If you look at 33, this section here to the right-hand side, I've jumped ahead a little bit, but these are our investment memos. And there are links in this deck to each of these investment memos, and we share them with our LPs. And so I've explained in 50 to 70 pages in these memos why we're investing in what we're investing in. And so for those of you in Fund 4, just as an example, you can click on Kraken on this link. We purchased Kraken at a $2.8 billion valuation. There's a 50-page explanation as to why we did that. The IPO coming in Q1 will be between 25 and 30 billion. So it's that investment that's going to return 10 times. We put in around 10 to 15% of the fund into that Kraken investment for you in Fund 4. So that's something very rare. We feel like we have a responsibility, but there's also a huge need for us to educate people about crypto and blockchain. And I think Brian and I sort of are very like-minded about that. We're business people, but we also feel like it's our job to help bring people into the space so that basically their savings, the purchasing power of your assets in coming years doesn't depreciate the way it has over the past 10 years. I know it's strange to think this, but even if you were invested in the last 10 years in something like the NASDAQ,
how do you get out of a rat race? How do you create wealth not only for yourself, but also for the generations to come after?
I am absolutely amazed with the quality of companies that we're getting exposure to.
We go on to Zoom calls with the innovators and the folks who are building new applications in metaverse, blockchain, artificial intelligence, decentralized finance.
What's going on, everybody? Thumbs up if you can see me.
We are focusing on early stage investment.
And the quality of people that we're getting exposure to, whether it be Dan Tapiero with 1RT, Jason Ma from Open, Yatsu from Animoca.
It's been a phenomenal experience thus far. It has far exceeded my expectations.
We are focusing on cutting edge technologies.
I view it now as the best investment I've ever made. The upside I view is unlimited.
And as a retail investor, I would never get this exposure anywhere else outside of Investment Club.
See you in the Investment Club.
which has done well. You've massively underperformed owning Bitcoin or Ethereum or many of the different assets in this space. And so, but it's very complicated. I have to say, I've said that again. I've said that twice, and I want to show you a slide in a second about that. But before I do, this section in the middle is interesting because it shows you the structure of the investments of the type of things that we own. So we don't just go in and own common shares. These are private investments, and we tend to negotiate for as much, I would say as much protection on the downside as possible by owning preferred shares with liquidation preferences. That just means that if the company gets into trouble, we're the first money out. We have, in a sense, an embedded put within the equity investments that we have. And so I've listed here the structure of the investments we have. And then to the left is just a section here. We have 12 board seats. So of the 24 investments, I also have 12 board seats, and we get very involved with the companies. We have 21 people. I have 5 partners. The board seats are split essentially between the partners, and we're actively involved with the company. Sometimes people say to me, Dan, look, you're building this broad sector bet on the digital asset ecosystem. Maybe I should just own Coinbase, as my sector bet. And I said, look, we have a 10-year life fund. We have a fee structure where you have to pay fees. You're locked up for 10 years. And, I have to say, we love Coinbase. We think Coinbase is going up 3, 4, 5, 6x in coming years. When you own Coinbase, and I think everyone on this call should own Coinbase in their stock accounts. And you don't have to pay us anything, right? But understand this, you're going to own common shares, and they're public and they're liquid. And in the coming bear market, just as in the last bear market, Coinbase went down over 80%. And so this is something very important to get your head around. There's huge volatility in this space that's not going away. And the way we've structured our portfolio with preferred, with diversification of and I'll get into this in a second, diversification of within the space in terms of what these companies do, geographic diversification, we seek to create for you I would call a sleep well at night exposure to the space that does not get marked down to the same degree that the underlying liquid assets do. And so our Fund 3, which was launched at the absolute peak of the last bull market, even with Bitcoin and Ethereum going down 80% from 21 down to the bottom in 22, our fund's max drawdown was 10 to 15%. So to be able to structure, I say, well, what's the magic of what we do is that, you're going to be stuck into this space for 10 years. It's very difficult to hold liquid positions. But this is the best way, at least in my opinion, and for my own personal money, I'm one of the single largest LPs, individual LPs in all the funds. I own the entire management company. I own over 50% of the GP of all the funds. So I am, super aligned. And, for my own personal exposure to this space, I tell everybody the same thing. You should have a little bit of Bitcoin, a little bit of Ethereum in a digital wallet, You can have a venture fund if you like. I know Brian has some venture investments. We don't do venture. We are more in this growth later stage. And then you should have some exposure to us. We're not trying to make, 100x or, some of these venture funds are really trying to make huge, I would say multiples. Again, they have lots of volatility. Our focus is we're going to make a 5 to 8x on the portfolio over the 10-year life of the fund. And so we're making much larger investments in more developed, more mature businesses that are generally making 50 million to 100 million or more in revenue. And so that's another way that we sort of limit the, I would say, reduce the risk. If we go back to page 25 for a second, I don't want to scare people too much, but when I talk about complexity, I'm really talking about this. This is you won't find this or see this anywhere else. I know there's a lot of small words here. I see Anna Lee here on the screen. She's squinting to look at the words. Don't worry. These are the black boxes are the sectors within the digital asset ecosystem that exist today. The dots, the black dots are the subsectors. So today there are 100 subsectors within this new world, this digital asset world. The companies underneath the subsectors that are underlined are ones that we own today. The yellow ones are ones that we will likely own or we will seek to own in our Fund 5. So our function really is we're going to build a portfolio that's leveraged to as many of the different developments happening within the DAE, as I call it. Now, what's really scary about this is that 3 years ago, the 80% of the right-hand side of this page did not exist. So just think about how fast the growth is. The value in the space, the total value when I had the idea for this in 2019 was $300 billion. That was the value of Bitcoin, Ethereum, and all the businesses in the space was $300 billion. And I said, look, I sat back and I thought, where can the value of this space go over the next 10 years? And I thought 10 trillion. That would be a 30x. And I was in the investment business for 25 years and I retired in 2012 and I worked for some of the sort of great portfolio managers. I'm not going to get into my bio today. You can read it. But never in my career, and had a very successful career managing, a global macro portfolio. I never had called for a 30x in anything. And I thought that people would honestly think I was nuts. So I put that view that I had about the growth in the digital asset ecosystem into the name of my first few funds, which was called 10T, which stands for 10 trillion. And again, that was this value of the space going from 300 billion 30 times is 10 trillion. So on day one, I said this value within 10 years is going to get to 10 trillion. We've rebranded to 50 trillion because now after 5 years, the value in the space is $5 trillion. It's gone up 15 times since I had the idea to launch these funds. And I think in the coming 10 years, we're going to move from 5 trillion to 50 trillion as all assets, I think, eventually move on chain. We do have this view, and I think we should just go to go to page 15 for a second. We think it's very early still in the process of, I would call it the broad tokenization of all assets, all things of value will eventually sit on a blockchain. And, look, Bitcoin was founded over 15 years ago. The space has grown again from 2019. It was 300 billion. Today it's 5 trillion going to 50 trillion. You might say, well, look, have I missed the opportunity? And if you look at this chart on the right-hand side, it's very interesting because the adoption of the internet in the 90s has been tracking with 100% correlation the adoption of blockchain as measured by the number of digital wallets in the world. And so in 2001, 9% of the world had access to the internet. Today, 9% of the world have digital wallets. In the following 10 years, from 2001 to 2011, you went from 9% to 30% of the world having internet access. So we think, and this has been a perfect correlation over the last 10 years, we don't see any reason why it should stop. We think over the next 10 years, 10 years from now, 30% of the world will have digital wallets. And we think that provides tremendous wind at our back for the opportunity set that we see ahead. And just to look at this, since we're on this page, you can see here this chart to the bottom, on the bottom left-hand side, of stablecoin transaction volume. Now, stablecoins are it's just digital fiat currency that's backed by a digital token. This concept, this business, didn't exist 5 years ago. In 2019, there were no stablecoins, zero. Today, they're going to do, last year, and this chart shows $14 trillion of volume on stablecoins, which is greater than the Visa payment network volume. So there aren't that many things in my career that I've ever seen grow from 0 to 14 trillion in 5 years. So if you're thinking about, does this space have longevity? When my first investor calls in the beginning, and I'm sure Brian dealt with this, is most people just wanted to sort of explain to me why Bitcoin was about fraud and money laundering, that, there were scams all over the place. There were no uses except for, trading or whatever it is. There are a huge number of use cases, and this is one that's developed. Now, understand this, the digitization of money, of currency, could not have been possible without the invention of Bitcoin and the code that was invented that supports and is the code that is backing the original Bitcoin code. So when people say, okay, well, I believe in the blockchain, but I'm not sure about Bitcoin, it doesn't make sense at all. The whole thing is Bitcoin. And if you really want to read up more about it, I would really suggest reading Jan Pritzker's book, Inventing Bitcoin. It's a 100-page book. It explains the functioning of the Bitcoin network. It's, it took me quite a few years to really understand that the value of this sort of new decentralized ledger, there was a network of value that wasn't controlled by anybody. And of course you have, I don't want to get too much into this, but you have decentralized node operators who are validating transactions on this network. There is no intermediary. The code behind the source code behind Bitcoin, it has it all running in essentially on its own. All the other cryptocurrencies, Ethereum, Solana, are the other two core ones, but all of the code that supports those cryptocurrencies is all derived from the initial Bitcoin code. So understanding just how that machine works is probably worth your time, because all the innovations stem from that original innovation. And you can see here, take a look at this thing in the middle at the bottom. These are monthly active addresses in the decentralized financial world, which is called DeFi. And, DeFi is a world, and Brian has classes on DeFi that I've seen him give, is essentially allows you to have your own wallet and interact with other counterparties, allows you to stake, allows you to trade, swap, be involved, move stablecoin to stablecoin, move from stablecoin to Bitcoin, move cross-chain, and all of this without an intermediary. That is what essentially DeFi is about. And you can see that the number of wallets that have been active has exploded in the last 18 months. When I first started this, there were only 6 million wallets. And even as recently as 18 months ago, probably like 10 to 15 million. Up 10x. We have 150 million now monthly active addresses in DeFi. And the revenue being generated, this is what we care about because we're investors, right? We want to make money. The revenue in the DeFi world has completely exploded as well. You see here 283 million. Didn't even exist 5 years ago. So it goes back to that map of the digital asset ecosystem. DeFi didn't even really exist 5 years ago. And today, all the various activities in DeFi are generating 150 to $200 million of revenue a month. And so, those are the businesses that we're seeking to focus on. Companies, again, that are already making 50 to 100 million that are not venture. If we go to the next page, you can just see a little bit here about how small, this again, are we early, are we late, how small the digital asset world is still compared to the rest of the financial world. We think, within 10 years, if the total value of all the world's assets hits, let's say, 1,000 trillion, so it's 800 trillion today, let's say it goes up to 1,000 trillion, even if we hit 50T, which is our view, it will still, the digital world will only be 5% of the total value of all the assets out there. We have quite a few institutional investors in the funds. I have a friend of mine who runs the Texas Teachers Pension Fund. They've invested $30 million with us. He says to me the other day, Dan, 50T is too conservative. And he says, if we're going to have 1,000 trillion in the total value, much more of value and money will be digitized in 10 years from now. So we really do think that 50T is a conservative estimate, and we're going to be owning the companies that are building that future. If you go to page 20, you could see what some of those companies are, because we do something, I think, that's different from any other private equity fund I've seen. This is a sample, sort of a sample of what the portfolio will likely look like that we are going to build for you. We did this in Fund 4, so those of you in Fund 4, there was a similar page, but there were different names on it. This the portfolio will be 80% in growth investments. There is one slight difference in this fund versus the other four, is that we have a small bucket of 15% for growth stage protocols. Those are businesses where there is no equity for the revenue to accrue to. The revenue accrues to the token. And so they're, businesses making $100 million, and Brian knows each of these, and these are just sort of an example of the type of investments. We're going to have 4 or 5 in this bucket. We have an opt-out. I'm not sure you'll be able to, but we are allowing people to opt out if they really don't want to own tokens. But they're more developed businesses. The revenue accrues to the token. There actually is no equity. And we think that the world is moving to a place where, we're not really sure, I think equity is not going away. I think equity has established guidelines, and there's a clear framework for ownership. But as things become more tokenized and more on chain, it is possible that equity as a form of ownership, is reduced versus token ownership. One day we might all just have one digital wallet, and we might just have, and everything that we own of value will be in that digital wallet. There might be equity that's tokenized on a blockchain, or there might be tokens specifically that belong to a blockchain that may be in that wallet. So we're in a moment of transition now, whereas 5 years ago, there were no growth stage protocols. There were no tokens that had businesses that were generating $100, $200 million in revenue. So we have to adjust a little bit, and we want to be in investments that we think we can make, a 5 to 8x return. In the left-hand side, you see these are 3 buckets of equity. There's infrastructure businesses, blockchain finance businesses, and consumer businesses. In Fund 5, we've already made an investment in MoonPay. And so MoonPay will be the first investment in Fund 5. And we've written an extensive memo on MoonPay that should be in the data room. Again, one of our 50 to 70 page investment memos. It's a very special deal. I'm not sure I have time to get into the specifics of it, but these, I can't say with 100% certainty that these will be all the companies in the portfolio. Some of them we may not have access to. There'll be other ones that come along. And then we have a bucket of 20% where we will focus on special sits. This capital for this section, we probably won't even call until the next bear phase. Again, I know, Brian, we have a different call structure than you do, but this is also something new that we do. We didn't do in the first few funds. We didn't really have the skill set, but we found the ability to buy things during the bear phase really juiced our returns. And we see that in Fund 4 because we were able to buy things that were from distressed sellers. We bought a business out of bankruptcy. That was another special situation that we did in Fund 4. I really like getting in things at good value. So this bucket, which didn't exist in the previous funds, we think will provide, an extra bit of alpha. The next page, just briefly, I won't go through it, but if you look at the deck, these are what some of these companies do. These are specific things. You can read little blurbs about what they actually do if you're interested. And again, how much revenue they're making. Many people are very surprised to learn how many very large businesses there are.
Peter Thiel took $500,000 and turned it into $1 billion using the exact same techniques we're using inside the investment club. He met a CEO, his name was Zuckerberg. He pitched him the deal and he said, okay, I'll give you $500,000. Mark went public and sold the shares to people like you. Well, what happened to Peter? Well, he exited and got a 2,300x return. The wealthy invest in early stage companies, folks. The public markets are for suckers. It's a rigged game. By the way, this happens in crypto as well. It's called pre-sale tokens. This is Solana. Does anybody know this chain? They sold pre-sale tokens for 4 cents. And you can see the date on there, April 5th, 2018. Look at Solana today, folks. That thing's up over 1,000x. The media and Wall Street and all these hype people get you to buy the top. Meanwhile, they put their clients in at the bottom and they use you for liquidity to make their clients rich. You can play this same game. You just have to have the financial education and the deal flow. That's it.
Brian, if we skip ahead for a second to 24, you can see the number of companies that are in our world. This is our universe right here of companies, $400 million and larger. There are 125 companies. That list I showed you of companies we're going to own is derived from this list. The 100 million to 400 million, 100 is too small for us. We keep a very close eye on them given how fast the growth in the space is. And as they move from 100 into sort of 400 million. Why do I say 400 million? That's a company making 40 to 50 million in revenue. And maximum, we really don't want to pay more than a 10 times revenue multiple. So that's sort of our universe of companies. The gray shaded boxes here are companies that we own today. And we own 3 smaller ones. Each of those are less than 1% of our AUM. They were special situations, special deals. It's not really, the core part of what we do. But, this is our universe. And we're connected directly or one person removed from every single company on this page. We have our 3-page tear sheets on each of these companies. We track them. They know us. And you can see if we just go for a second to the end, just go to 33, you can see when I say they know us, it's because we really sit, 34, I'm sorry, we sit in the middle of this digital asset ecosystem. And also, we're in the middle of the companies that we own. This is our portfolio of companies, and we're driving synergies between our companies. So, and we also introduce and drive synergies between our companies and the companies that we don't own, but that yet are in our universe. And if you look at the next page, you can see sort of more examples. You can read the small type later on. We help companies with their strategy and operations as well. Our board seats give us access. And again, for whatever reason, we're the only people doing this. So, everyone knows who we are. When they want to raise capital, of significance, they come to us. Our average check size tends to be around $50 million. I was happy to be able to let, individual smaller investors in like yourselves through Brian. I normally, as I mentioned before, we have mostly institutional investors. We have 30 billionaire family offices in the funds. I also have other pension funds. The Michigan Pension Fund, MERS, has $40 million with us. We have a New York City Union's pension fund has invested $50 million. We're going to have some sovereign wealth type capital. So we've gone through a lot of diligence. And I think what those larger investors like is that we have a process. We do a lot of homework. We share it with our LPs, and we're careful about where we enter. And then we provide you this exposure that also can sustain and do all right even during bear phases. Because over the 10-year life of this fund, you're going to have 2 or 3 bear markets. They're not going away. I know there's a lot of debate now, and Brian's probably aware of this on X and other places about, well, there isn't going to be a bear market this time. Well, I'm not exactly sure when it's going to come. It could be.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.